Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are passing the most in trade today. We'll also find out where exactly can you find margin of safety in the current fall in the markets as well. And should there be more sell-off, where exactly should your focus be? We'll get you expert views, but first up, a quick check on how the markets are doing at this point in time. Well, the Sensex are still down by about 612 odd points at 66,188. The Nifty meanwhile is down by 170 points at 19,729 currently, about 0.9% of a fall for the markets. The fall is similar to what we had checked in the mid halfway mark as well at 12:30. So it's holding on to this fall. It's not falling any further from here currently. Sectorally, of course, all the sectors of the Nifty are down in trade, led by sharp fall coming in on the Nifty Bank. That's now down by 1.5% in trade. Autos are down by 1.8%. PSU banks is what is now feeling the deeper pinch. You can see profits being taken sharply off the table. This is the index that had seen sharp rise over the last few days as well, and 2.4% of a fall can now be seen on the PSU banking index. Apart from this, you're also seeing declines come in on the realty pack, on financial services as well, to the tune of 1.2%, 1.3% each, and all the sectors are coming under pressure. Speaking of the particular stocks that are declining on the Nifty index today, the heavyweight counters, definitely ICICI Bank now down by 3% odd, M&M down by 3%, Bajaj Auto, State Bank of India, Tata Motors, Hero Moto, IndusInd Bank, Kotak Mahindra Bank now down by 1.8% as well. HCL Technologies, these are the stocks that are definitely down in trade. Reliance Industries continues to slide about 0.6% of a fall for this one as well. So these are the counters that are declining in trade. Still about 8-10 stocks holding up as far as the Nifty 50 stocks are concerned. Amidst those, Adani Group stocks, Adani Ports is up in trade, 1.5% surge can be seen. Tech Mahindra, Bharti Airtel, Infosys, Dr. Reddy's and BPCL, some of the other top gainers on the index right now. From the Nifty 500 basket, you do have Gujarat Ambuja Exports rising about 6%, Brightcom Group 5% higher, Capri Global Capital up by 4%, Cholamandalam Finance, Adani Power. These are the stocks that are holding up gains in the broader markets right now. Let's welcome our guest on the show. Osho Krishnan now joins in. He's the Senior Technology Analyst, Senior Technical Analyst from Angel One. Well, Osho, welcome to the show and thank you so much for taking the time out for this discussion. I want to begin by first understanding from you. 3 days of a fall is what we've seen consecutively on the markets. 4 lakh crore rupees of a loss is what investors have already seen. How much more downside from here do you see? What are the charts telling you?
Very good afternoon, Sakshi. Thank you for having me in the show. Well, talking about the downfall that we have seen from the past 3 days. So after the rally of 3 weeks, we have seen a very significant correction in our market. And that is basically lies upon the global concerns between India and Canada as of now. But the intensity of this downfall has been taken very aggravatingly, because from here onwards, one can expect 19,700 to be seen as the crucial support zone. The reason being that 19,720 odd levels is the 50% Fibonacci retracement of the recent rally. So on the technical perspective, the 50% Fibonacci retracement should be acting as a cushion for our market if the global concerns are not aggravated from here onwards. But if it does, then from here onwards also one can expect a deep correction towards 19,600 on immediate basis. So that means on overall parameters, we are having a lot of still we are having a room on the downside. So we are expecting that one should not be very much aggressive with the 3-day correction and should wait for some kind of sustainability in the market. And once the market again goes into consolidation, then one should look for opportunities to buy in good counters from the heavyweight packs.
Okay. Let's focus on which are the pockets that you still believe, offer margin of safety and value to investors despite the kind of fall that we have seen in the markets.
See, as of now, all the sectors are heavily into deep correction. But looking at the marginal of safety, then from here onwards, one can expect a decent consolidation in the capital goods segment, that from here onwards, there can be some kind of consolidation or a limited downfall in the capital goods segment. To be very specific, L&T, Siemens, some of the counters which are still having potential to surge in the coming period. So one should try to focus on such counters which are still looking very positive, and in spite of the correction, they have not corrected that deeply in today's or in past 3 days. So we have to focus something around capital goods, followed by some of the pharmaceutical companies also, which are still looking very positive. So taking the names of some of the pharma industries, then Sun Pharma, Cipla, they are in a consolidation zone as of now. So from here onwards, one can expect a gradual increase in the prices, and one can expect these to see in a very, let's say, 1 to 2 weeks of time frame, one can get a very decent returns in pharma and capital goods segments.
Pharma and capital goods segments is what you're bullish on. Any particular stocks that you still may find value in as far as the mid and the small caps are concerned? Because these are the pockets that ran up very, very sharply. There were emerging concerns of valuation bubble getting created, euphoria surrounding this space as well. But since the large part of our investors community always focuses on the mid and the small caps, looking at the higher rewards that these sectors tend to offer, any particular stocks that you're looking in from this basket that one can still look at?
Overall, the auto ancillaries were looking very positive. So even for the large cap and even the mid cap companies from the auto ancillaries and auto sectors are looking very positive till now. And specifically, Balkrishna Industry is on the verge of giving a breakout. So even though the market has been falling in a deep correction, Balkrishna Industries has sustained above the zone of 2500. So from near term or from mid-term perspective, one can expect a gradual up move in the counter, followed by some of the heavyweights counter also, like Grasim is also looking very positive. Grasim has seen a very strong breakout in past week, and this 3 days of correction, it has came to the breakout zone of the neckline. So currently it is hovering near the neckline of the breakout zone. So even that counter is looking very positive for short to medium term time frame or perspective. So overall, we should be very cautious and should not be very much complacent or become aggressive in current market conditions, and try to wait for some kind of sustenance or consolidation. Then we can aggressively go buying in the counters.
Okay. Fine, got that point of view from you. Let's also look at some of the F&O stocks that are doing well in trade today. Berger Paints, that is the top gainer in the F&O basket, about 3.3% higher in trade. I wanted to ask you about this because, you know, we've been seeing the oil prices consistently rising, and now, you know, above $95 a barrel. Experts look at even $100 a barrel being seen in the near course of time. And one sector that actually uses a lot of crude oil as part of their raw materials is the paint sector. Why then do you think that at this point in time Berger Paints is showing this kind of a momentum? Is there something that investors should read into the stock right now?
See, overall, looking at the overall technical perspective of Berger Paint, then it has seen a very strong movement in the current financial year. So it is hovering in the cycle of higher highs, higher lows pattern. And even at current period also, it is just likely to enter in the overbought territory. So 750 to 760 is the zone where one can see some kind of resilience in this counter. So one should wait for some kind of correction towards 720, 730 odd levels. And then from there onwards, if it sustains those levels, then from there onwards, one can see a decent up rally towards 770 in the near term period. But as of now, one should not be very much aggressive in Berger Paint because it has already seen a very strong movement in the past 3-4 days. And from here onwards, on the technical parameters, it is about to enter the overbought territory. So one should stay sidelines with the counter, and once it sees a deep correction or a very gradual correction towards 730, 720 odd zone, then one should look to buy this counter.
Okay, understood that. I also wanted to discuss the PSU banking space with you, Osho, and this is because the kind of sharp run up that we've seen in this space right from the beginning of this entire year. We saw the first leg of the rally, it paused for a bit, consolidated, and in this recent set of the run up in the last 1 month or so, what we have seen is that the second rung PSU banks having also risen very sharply. Even today, we have Indian Overseas Bank continuously soaring higher. We've seen Bank of Baroda, Canara Bank, Bank of Maharashtra, these kind of stocks also moving up very, very sharply. How are you looking at the decline that's come in today because of the overall pressure in the markets? Do you think these dips offer an opportunity to investors to buy, those who had missed out on the kind of move that we've already seen?
Yes, talking about the specific sector of PSU banks, then from past 2 weeks we have seen a very drastic up move in the counter, and as of now there has been approximately 2.5 to 3% kind of correction in almost all the PSU counters in today's market. But we can expect some more cool off, because if we will be looking at the previous performance of the past 2 weeks, then they have increased more than 8 to 9%, or 8 to even some have moved more than 10% in the past 2 weeks. So one should look for opportunities once they retrace for approximately either of the rally 38.2% or 50% of the Fibonacci retracement. Then one should look for buying opportunity in these counters. As of now, many of the counters still looks very positive and still has the potential to move into strong uncharted territory also. But from here onwards, looking at the overall market scenario, one should wait for some kind of sustainability even in the PSU banks, and then again they should re-enter in the rally once the market gains some kind of consolidation in the near future.
Any one or two topics from the PSU basket that you'd be looking at?
See, as of now, I'm liking Union Bank. Union Bank is about to enter the three-digit numbers, and from yesterday onwards, they have seen a kind of correction. So as of now, it is still looking very positive, and one can expect it to move towards 108 and 114 in the near period. So one should look for opportunities in many of the counters, not only Union Bank, even Federal Bank, Can Bank, all these counters are looking very positive. So better to wait for some kind of correction in the market. And I assume that from next week onwards, there can be a strong reversal that can be seen. So one should basically stay sidelines till tomorrow maximum. And from next week onwards, one can look for buying opportunities.
Okay. I'll also ask you in the same breath about HDFC Bank, the poster boy of private sector banks. But this stock has had a very rough run throughout this year so far. It's been one of the biggest underperformers. And from the last three odd sessions, it has been continuously on the downside. Yesterday reported the worst fall in the last 4 months. Market cap erosion of 1 lakh crore rupees odd, following brokerage houses downgrades as well coming in. Concerns being raised in the analyst meet of the kind of squeeze on the margins and hit on the asset quality that can come in. HDFC Bank at 1553, how does it look on the charts to you?
See, overall, looking from medium-term perspective, then the chart structure is very positive for HDFC Bank. But for short-term traders or day traders, there can be some kind of more correction that can be seen, and specifically towards the zone of 1520 on the spot levels. So 1520, 1510 can be seen in this counter. But again, from here onwards, we can see a strong pullback in this counter on the higher end. Approximately 1620 to 1615 is the stiff resistance, which is also the 200-day SMA, and coinciding with the 200 SMA and bearish gap. So these two things are very crucial resistance zone for HDFC Bank. Once it surpasses the bearish gap, then from here onwards, one can expect a very strong run. Approximately 1700 and 1750 is in the chart for HDFC Bank from short to medium term time frame.
All right, understood that. Well, many thanks, Osho, for being with us on the show and discussing all these insights about various sectors and stocks and the way investors should be approaching the markets in this current fall as well. Markets are slightly pulling off the day's low. You can see about 550 points of decline now on the Sensex, 160 point of a fall for the Nifty. It's trying to inch above the 19,750 odd mark, but we'll continue to keep an eye out on where are we headed. 15 minutes to go before we shut shop. looks like there is slight gain coming in. Let's look at the stocks that are contributing to the gains right now. So you can see Tech Mahindra, Dr. Reddy's, Asian Paints, Bharti Airtel, Infosys. These are the stocks that are pulling up the index higher and stemming the loss for the markets right now. Adani Ports also higher by 1.5%. But largely, the breadth of the market still remains weak at this point in time too. We'll continue to track the market movement for you, and you can also be with us on Business Today TV to catch all the updates from the world of business and stock markets. What you should also get ready is for our special series, that's Market Masters, where market gurus reveal their investment strategies for a winning portfolio. So you can join us on this Monday, that's 25th of September, with Saurabh Mukherjee, founder and CEO of Marcellus Investment Managers, to get his market insights, in-depth market analysis. You can also send us your queries on this number that's flashing on your screens. That's 730-308-0488, and these questions will be taken live.
Prime Minister Narendra Modi played the perfect host, but the chill in the Indo-Canada ties could not be hidden by the warmth of Indian hospitality. Canada had, after all, just a couple of months ago, fired the first shot by calling off talks on a free trade agreement talks with India. And earlier Tuesday, India woke up to the news of the Canadian Prime Minister alleging role of Indian authorities in